UPST down 17.14%. This is Wednesday, the 6th of July. The stock is showing some weakness within a longer term bullish trend. Its 200-day moving average is sloping bullishly upwards, and it's generating significant buzz in the markets following a whirlwind of mixed signals that have left both retail and institutional investors divided. The company recently posted a major revenue beat in its latest earnings outcomes, suggesting strong operational performance and momentum in its core business. However, this positive news was quickly overshadowed by a bearish analyst call, specifically a sell rating from Goldman Sachs, which triggered immediate volatility in the stock's price. So the stock experienced sharp intraday swings with bulls and bears battling over its near-term direction. Many traders were caught off guard by the conflicting signals, a fundamentally strong earnings beat clashing with a negative analyst outlook. As a result, trading volumes spiked, and social media platforms like Reddit, X, and stock tweets lit up with heated debates. So, key themes in community discussion: valuation concerns versus growth narrative. Bears argue that despite their revenue beat, Upstart remains richly valued, especially given macroeconomic headwinds like rising delinquencies in consumer lending and tightening credit conditions. Bulls counter that the company's AI-driven lending model provides a unique edge, enabling a better risk assessment and potentially disrupting traditional credit scoring. This could fuel triple-digit growth in the coming years, especially if credit markets normalize. So, is the deep a buying opportunity? That's another key theme. A large part of the community sees the recent dip as a classic overreaction driven by more headline sentiment than fundamentals. Others are cautious, warning that the stock could be forming a bull trap, especially if macro factors like interest rates or credit quality deteriorate further. Short squeeze speculation, with short interest in the stock still debated. Some traders are speculating on a potential short squeeze, similar to what was seen in 2021. Momentum traders are watching technical levels closely, especially support zones from prior rallies. Comparisons to other fintechs. Upstart is being compared to peers like SoFi, Affirm, and Lending Club, with investors trying to determine if it's lending, if it's leading the innovation curve, or if its model is more vulnerable in tightening cycles. So long-term bullish sentiments, you can always have a read of them. Macro factors at play. Looking ahead, with next earnings report on the horizon and analyst downgrades adding fuel to the volatility, UPST remains a high risk, high reward play in the fintech space. Investors are bracing for further swings, but many are watching closely for signs of stabilization or another earnings surprise that could shift sentiment again. So, too long didn't read. Revenue beat versus Goldman Sachs sale rating equals to volatility. Debate split over valuation or by the deep opportunity. Short squeeze potential due to high short interest. Long-term optimism tied to AI lending and disruptive growth. Macro risks loom large. Interest rates, credit quality, regulatory challenges. So yeah, we have the extrapolation of its 3-day moving average, seeing that this weakness will remain in place up till Friday, or rather the steep decline will remain in place up to Friday. However, the weakness will also extend up to Friday, the 22nd of August, with a very brief attempt to see if a bounce can occur. But according to this extrapolation, it will fail. But we might get a decent recovery, if anything, from um, from Monday the 25th of August and may hold or may remain strong up till Tuesday the 9th of September. And so all in all, the extrapolation is more of a consolidation of this this eventful plunge we've had today. So in terms of projections, what do we have? We have currently in play at the moment. We have 106.25, 120.84, 129.86 currently in play as things stand right now. Weakness in set it has to be okay. Well, a decent amount of as you can imagine, there is strong selling pressure in play here. However, the derivatives are all still positive, indicating that maybe a bottom may is in sight. But we have to have a look at the 4 hour chart before we conclude because it's definitely going must have most definitely it is highly likely that has amplified selling pressure in play here. Let's have a look. Yes, that's what I said. Yes, magnified or up selling pressure here, negative 14.8049, negative 8.40494. This is for its 10 period moving average, and this is for its 21 period moving average. They are all everything is bearish, everything is negative here. So if you're in doubt, short sellers and sellers are making the most of this market right now. So lower prices, it's I expect it to remain in place. If you like, or I would rather say a distributive contraction. So weakness, the plunge is expected to remain in place. However, it will cycle all the way down. It won't just be the extrapolation. It's not saying as you can clearly see, it's not a plunge. It's just you know, a graduated decline. So let's see now. Projections here, a lot more. They're in between what we saw over there. We have here 74.77, 76.6, 79.55, 84.49, 87.7, 89.68. So just see what you make of UPST, and I'll continue to update you. Thank you very much for watching this video.